Hello, my name is Steve Bigelow with the Candlestick Forum. We're still in an uptrend, except the markets are starting to show a little bit of tentativeness. Nice, strong double bottom off your hammer, but now you're up in the overbought condition. And we're doing a doji harami, but we're still above the 3T line. However, that gives a little bit of a warning to say that if you start seeing some selling, especially if the markets start coming back below the low of today, there's going to be some profit taking back to the T line, which also illustrates that the Dow's not breaking up through this level, which was needed to kind of offset the overall downtrending market conditions. The NASDAQ, on the other hand, did get up through this level on Friday, kind of held up there today, except also up here in the overbought area, doing a doji harami. If they start selling off tomorrow, that tells you this level is failing. May not tell you we're back in a downtrend, but it probably tells you we might be in a sideways mode for a while until the market can pick up some strength. The biggies like Apple aren't showing any signs of selling yet, but it's not uncommon that when they go up through a resistance level, they come back to test it to see if it's going to act as our support level. These are just kind of the common price movements of human nature. We just have a benefit of seeing where those reversals might be occurring and what they might be doing based upon candlestick signals and patterns. The best way to get into a strong trade is being able to visually recognize the setup. As we can see on this chart, LTRPB, you had a fry pan bottom right up here to the 200-day moving average. That is an alert to say, watch to see if they can break out through the 200, confirming a breakout of a fry pan bottom as well as the breakout of the 200. The reason they work so effectively is we can see the pattern set up, but most investors are watching to see what's happening at important technical levels. They'll start buying somewhere up here because they can see that it broke out through the 200. The candlestick investor has the advantage of saying, all right, we have a high probability trade by buying here as long as it doesn't close back below the 200. Now, the rhetorical question always is, do we always get big price moves like this? Definitely not. But the idea is that if you're putting yourself into situations where the probabilities are that it's heading up, you're going to have much better probabilities of being in a big price move like this. So there are some good trade setups. The J-hook pattern, as illustrated in Boeing, supported right here on the T-line. That's why the T-line still keeps acting as an enhancing indicator, showing you what the patterns are that are setting up. The fact that they gap this up through the resistance level tells us we've probably got wave 1, wave 2, wave 3 more to the upside. So those are good probability trades. However, the best probability trades are that same pattern, but at levels everybody is watching. This is a J-hook pattern that we call a bobble breakout, a more defined J-hook pattern. We can see exactly where the profit taking started at a level everybody was watching. We can see that it wasn't closing below the T-line. In this case, when they gap it up, not only gap it up, but they gapped it up above the 50-day moving average and went positive. That not only is a bobble breakout, but that's a bobble breakout with a very strong force to it, producing a high probability you're going to be in an uptrend. So you use that information. Our recommendation on GFS was based upon we had a bobble breakout, which meant there should be more upside. If it started trading positive today, you could be buying. So you're either buying the stock or these options. I think it was the 55s, basically doubled today. So This is not rocket science. This is basically analyzing what the Japanese race traders have illustrated is the normal human nature pattern setups that allow us to identify when a high probability trade is setting up. Our recommendation on SG was the same scenario. There was your Morningstar type signal. There was your bobble breakout, buying on positive trading today. What is our anticipation? Wave 1, wave 2, wave 3 being the same magnitude as wave 1. What was our probability factor? Seeing that everybody was watching to see if it was going to come back up through the 50. They're all watching to see if it's coming up through the 50. We're watching to see what type of pattern is setting up, allows us to start buying early, well before everybody else is buying. So we have the visual recognition that if you can see a pattern, a J-hook pattern, notice your doji, bullish confirmation, and look where it did it, right off the 50. What's everybody anticipate if this was buying? They're going to the next moving average, giving you a high probability trade if it opens positive tomorrow. So what you can do visually using the signals and patterns is not only get yourself in profitable trades, but identifying which ones are the best profitable trades for a market condition. And right now, as the market condition is now come up through this level, we want to watch to see what happens at this level. That'll be it. We'll see you in the chat rooms.